Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extends its advance as expectations grow that the Reserve Bank of Australia could tighten policy at next week's meeting, with markets now pricing in roughly a 75% chance of a 25 base point hike that would lift the cash rate to 4.1%. Turning to the US data, February inflation did little to shift policy expectations, with CPI holding at 2.4 year on year and core CPI at 2.5%. Looking ahead, traders will monitor the Australian consumer inflation expectations while the US calendar features jobless claims, housing data, and the balance of trade. Along with that, we also get on Friday the core PCE. Meanwhile, geopolitical risks remain elevated as the US-Iran conflict and uncertainty over the energy market continues to whipsaw in terms of commodities. So turning to the technicals, we can see we're pushing towards that top side. I'll be very surprised if we can get above 71, 65, 90 area. And if we do see a bull trap, then I feel we may see a pullback towards the level of 70.5 and reassess. Turning to the euro, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, regained momentum and recaptures the 99 handle. I still feel 100 will cap or anywhere towards that level, as previously seen. Nevertheless, policy expectations in the US remain steady, with the Federal Reserve widely expected to keep rates on hold at its meeting on the 18th of March. While the European Central Bank was also left rates unchanged, with President Christine Lagarde maintaining a cautious tone amid projections that inflation will return to the 2% target over time. So turning to the technicals, although we did have a key reversal and failing to confirm that candle due to the rejection of 116.45.55, all eyes look back towards its bottom side of the range around 114.60.90. Let's see if we get a bounce. If we don't, then we have to reassess the next outlook for euro. Pushing back to the top side for dollar yen, that is around 159. Well, there is much talk of a potential intervention, and also there is much talk of a bull trap, like we previously seen back in January. If history repeats itself, then I do anticipate a sudden move to the downside around 155 as a target. There is a little bit of divergence here. Keep an eye on this current candlestick in case it closes in New York as a gravestone doji. That would be potentially negative. Sterling also wrapping up to a slightly bearish case in New York and now looks back towards 133.5 or even down to 133 as a potential target and reassess in case demand returns. Commodities, well, the market still whipsawed. We briefly looked above 5,200 and now it appears that we're heading back towards this bottom side of the range, seen around 5,000 or at least 5,100 for now. The ranges are still big, so if you are going to trade commodities, I do heed much attention to stop losses as well as how the markets can actually move, and look at history to see how vast the move is. Finishing up with oil. After the aggressive fall, the market finds support around the lows of 78.80, and now with this dragonfly doji's put a little bit more momentum to the upside. I'm a little bit cautious in how we play here, and let's see if we get a rejection around the 92 to 94 area. And if so, then we could see a move back to $86 a barrel, which needs to see a break there to reinstate the downside around 82 or maybe down lower. But fear is still playing a big role in this market. So do be aware on how you trade this, because it's likely to be very aggressive and whipsawed. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report and hope you enjoy the great start to the day.